Okay, all right, Mangalam. Thanks very much for that. Sacchitanand Uttekar joins in to discuss the technicals of the market now. Sacchitanand, welcome to the show. Well, it's definitely turning out to be a weak session for us. We seem to be on tenterhooks based on what's taking place on the geopolitical front. So, in that context, what would your approach be to today's trade?
Good afternoon, Ekta. Good afternoon, Mangalam. Clearly, if you look at both the indices, Nifty Bank is one shade, a week. Clearly, if you look at the weekly charts, there's a dark cloud cover kind of formation, which is awaiting a confirmation for its activation. But if you look at the overall range, 56,000 remains a very strong hurdle where its 5-day exponential moving average is placed. Unless we don't see the Nifty Bank closing above the same, there could be a possibility of further a decline going forward. But on the other hand, Nifty IT has been, doing phenomenally well. It has, started trending above its 200-day exponential moving average from last week itself. And if you look at the overall structure, it looks like a strong bullish flag formation breakout, which is still indicating that there could be a 1,200 points rally on the upside. So I think for the Nifty, it's a good sign, and the supports which are placed at around 24,700, 24,500. I think these supports will remain valid. And on the higher side, as Mangalam rightly said, 25,000 remains an immediate hurdle. So probably we may see some more range-bound action here. 24,800, 24,770 can be an ideal zone wherein some long positions can be deployed on a decline. The stop loss can be placed at 24,710 on a closing basis. And in a day or so, we may see again a rebound towards 25,000 levels. So I think the bias for Nifty remains positive. But when we look at the Nifty Bank, we still see there could be some supply pressure, which may push the index lower towards 55,000.
So then how do you play in individual stocks? Do you have a long and a short as well to hedge, or both longs?
Both longs, Mangalam. I think the bias for the market is still positive. So if you look at the contributors here from the IT pack, TCS has again given a very strong rebound. It has maintained its closing above its 200 monthly exponential moving average support, which is placed somewhere close to on 3480. If you look at the call writing, put writing data, it is indicating that 3,500 looks like a very strong, dependable support. Even if you look at the weekly RSI, it has managed to give a breakout above its previous swing high. So I think this is a good structure wherein there could be an extension of this particular move. Hence, we are recommending building long positions in TCS, keeping a stop loss at 3485 on a closing basis. Immediately, we may see an impact towards 3580. But eventually we see this move unfolding towards 3710. So a long call on TCS. The other pocket of strength is insurance stocks. And here, if you look at HDFC Life, we have already seen a V-shaped recovery in the last 3 trading sessions. It has maintained its support well at around 740, where its 50-day exponential moving average support is placed. From there, it has displayed a V-shaped recovery. If you look at the weekly charts, it looks like a rising 3 continuation pattern. So we are expecting that this move may extend eventually towards 810. And that's why we are recommending building fresh long positions here on a decline up to 770, keeping a stop loss at 758 for a pattern target somewhere close to around 810.
Okay, all right, Sacchitanand, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies and stocks. Well, we do have a couple of losers which are